Every trader has heard of price action, market structure, liquidity, order blocks, imbalances, you name it. But let's be honest, understanding how it all fits together isn't easy, and trying to piece it together from random strategies is even worse. That's exactly why we built the Price Action Toolkit. It puts the most important parts of price action into one complete toolkit, making it easier to see what actually moves the market. In this video, we'll break down how it works, how you can use it across any market or time frame, and why it's changing the way serious traders approach price action. If you want to follow along or start using it while you watch, the link to get access is in the description below. Let's start with the most important piece, market structure. This is how naked price action really moves. The toolkit automatically identifies the three most important types of market structure: change of character, break of structure, and change of character plus. A change of character, or CHoCH, is the first sign that the trend is flipping. In a downtrend, a bullish CHoCH forms when price creates a lower low, but instead of continuing lower, it breaks above the previous lower high, a sign that sellers are losing control and buyers are stepping in. In an uptrend, a bearish CHoCH forms when price creates a higher high but then reverses, breaking below the previous higher low. The CHoCH tells you the trend might reverse soon, like a warning light for your trades. But a CHoCH alone doesn't mean the trend has changed completely. That's where a break of structure, or BOS, comes in. A break of structure shows up when price clearly continues a trend by breaking past the previous high or low. In an uptrend, it occurs when price makes higher highs and higher lows. In a downtrend, it happens when price makes lower lows and lower highs. So, a change of character signals a trend shift, and a break of structure confirms the trend. But what if something bigger happens? That bigger move is what we call the change of character plus, or CHoCH plus. These are stronger than a regular change of character. They form when price fails to form a higher high or lower low before reversing, and they're also used to spot early trend reversals. In the indicator settings, you can enable CHoCH and CHoCH plus candle coloring. This automatically turns all candle colors bullish or bearish, depending on the recent CHoCH or CHoCH plus. That means you can instantly see the trend without checking for market structures. The toolkit also marks equal highs and equal lows. An equal high forms when price revisits a recent high and fails to go higher, and an equal low forms when price revisits a recent low and fails to go lower. You can use these as early signs of a reversal. Adjusting the ATR multiplier in the settings lets you fine-tune how frequently these appear. Use lower values for precise equal highs and lows, and higher values to spot more frequent but less exact levels. But structure isn't just about highs and lows, it's also about direction. That's why the toolkit also includes automatic trend lines to map out where price is moving next. They help you see if price is trending up or down, and spot where the trend might continue or break. For example, if price keeps bouncing off a bullish trend line, you know buyers are still in control. But if that trend line breaks, it could signal a shift, giving you a chance to catch an early reversal. But spotting these levels is just the beginning. The real magic happens when you combine them with liquidity, which we're jumping into next. Liquidity is found at swing highs and lows. These levels are areas where many traders place their stops. The price action toolkit automatically marks the two types of liquidity levels on your chart: buy-side liquidity and sell-side liquidity. Buy-side liquidity levels are found at highs. Short sellers typically place their stops around these areas. And sell-side liquidity is found at lows, which is where buyers will place their stops. These areas become targets for big traders like institutions because they need liquidity to fill large orders. In the toolkit settings, you can adjust how far back to look for these levels by adjusting the pivot length. Lower values detect more frequent levels that are closer to the current price, and higher values detect less frequent levels that are usually further away from the current price and are more significant. But here's the cool part: sometimes price quickly moves past these liquidity levels, triggering lots of orders, and then instantly reverses. This is called a liquidity grab, and the toolkit automatically detects these. It'll plot a bubble when a buy-side or sell-side liquidity grab is detected. The larger the bubble, the more significant the liquidity grab was. Check this example out. Price shoots up to this buy-side liquidity level, creates a long wick rejection candle, then comes back down. Seeing these liquidity levels and grabs in real time reveals how institutions manipulate the market in ways most traders never notice. But liquidity alone isn't enough. You need to know exactly where big traders actually place their orders so you can find perfect entries, and that's where order blocks come in. Order blocks are areas with lots of buyers or sellers waiting to enter the market. The toolkit automatically plots these areas on your chart, but it gets better. With the click of a button, you get an entire volume footprint for each zone. This shows you the total volume at that area, a visual representation of buyers and sellers, and a ratio percentage. The ratio shows you the proportion of high versus low volume in the order block. A low percentage indicates dominance of buyers or sellers, depending on whether the order block is bullish or bearish, and a higher percentage edge indicates reduced volume support, suggesting the zone is less reliable. But what happens when price doesn't respect an order block? When it blows right through it, that's when the zone flips and becomes a breaker block. Breaker blocks usually signal a major shift in sentiment and are great areas to enter for reversal setups. Just like order blocks, you can also show volumetric info on breaker blocks. Breaker blocks with high volume become strong support and resistance areas. Check this bearish order block example. It acted as resistance several times before price finally broke through it. The moment it became a breaker block, that old resistance turned into new support, making it a perfect area for buys. This is just one example of how the toolkit helps you spot high probability trades before they play out. If you want this kind of clarity in your own trading, click the link below and start using it today. But that's only half the picture. Big moves don't just happen because buyers or sellers show up. They need a reason to explode. That reason is imbalances. These are the gaps and voids left behind when price moves too fast, and they're often the first place price comes back to. The price action toolkit spots 3 types of imbalances. The first is fair value gaps, or FVGs. These act like price magnets. Price usually revisits these gaps to fill them, and the toolkit automatically detects bullish and bearish FVGs on your chart. You can control how often they appear with 2 key settings: detection method and sensitivity. The detection method is how you choose the type of FVGs you want plotted. Same, which only marks gaps created by 3 bullish or bearish candles. Mixed, which marks every gap that forms from a mix of bullish and bearish candles. And all, which plots both types of FVGs. The sensitivity setting lets you fine-tune the size of the gaps. Higher values only detect larger gaps, while lower values spot more gaps, but some might be weak and noisy. These gaps are perfect for catching pullbacks and finding safer entries. But to find the best gaps, you should turn on the volumetric info. Just like order blocks, you get a volume profile for each FVG. You can easily filter weak gaps this way, but price doesn't always respect FVGs. Sometimes it just cuts right through them, and when this happens, the FVG turns into an inversion fair value gap, or IFVG. Just like breaker blocks, they act like support and resistance. But here's why IFVGs are so powerful. They don't just mark reversal zones, they signal a full shift in market structure. A bullish IFVG means price just flipped from bearish to bullish, and a bearish IFVG flips the other way. These are where trends start and reversals take shape, the kind of moves smart money never ignores. But not all imbalances are gaps formed during momentum. Some come from low volume moves between candles, and that's where volume imbalances come in. These form when there's a gap between the open of a candle and the close of the previous candle. The toolkit automatically plots these on your chart. If you trade stocks, enable the Disable Overnight Gaps setting to avoid marking every market open as an imbalance, since price typically gaps up or down. All 3 of these imbalances are great for finding entries during market pullbacks, but your true edge comes when you can see how these imbalances align across multiple time frames and have a 3-dimensional view of price that most traders will never have. Trading on one time frame is like trying to drive using just your rear view mirror. You can react to what's behind you, but you have no idea what's coming ahead. The price action toolkit fixes that with multi-time frame analysis. You can see order blocks, fair value gaps, and more on up to 3 different time frames at once, all on the same chart, and setting it up couldn't be easier. Just jump into the toolkit settings and scroll to the time frame section. Select the time frames you want to include and toggle them on. The toolkit will then display features you have enabled from those time frames right on your current chart, each clearly labeled with a time frame it was detected on. Remember, only time frames equal to or higher than your current chart work with this feature. Features that work with this include fair value gaps, inversion FVGs, order blocks, breaker blocks, and liquidity grabs. This ensures you're always 2 steps ahead and don't get blindsided because you didn't see what was happening on the higher time frames. But to really nail your entries and exits, you need one more critical element: knowing when price is trading at a premium or discount. If you have ever entered a trade that looked perfect only to watch price immediately slap you in the face and run the other way, you probably bought at a premium or sold at a discount without even realizing it. The price action toolkit plots a premium, equilibrium, and discount zone. You should look for buys at discount zones and sells at premium zones. It lets you get the best possible entry, which will boost your risk to reward ratio. Another thing that makes these zones powerful is that they adjust automatically as price moves, so you do not have to manually redraw anything. As the market moves, the zones change with it, always keeping your view accurate. But understanding these zones is not the final piece. You still have to know how different times of the trading day can mess with your setups. That is why the toolkit also maps out market sessions. Markets behave completely differently differently during different sessions. New York session acts differently from London, and Asia is a whole different beast on its own. The price action toolkit helps you track all of it. You can clearly see where New York, London, Asia, and Frankfurt sessions start and end. If you want even more control, you can highlight specific periods like New York morning or New York lunch. Inside the session settings, you can pick which ones you want to display. Each session comes color-coded, so you can tell them apart without thinking twice. You can also turn on session titles if you want to see the name of the session right on your chart. Besides sessions, the toolkit plots key multi-time frame levels like the previous day high and low, previous week high and low, previous month high and low, and pre-market levels if you are trading stocks. For each time frame, you can choose if you want to show just the high and low or include the opening price too. But still, even with all this firepower, nobody wants to sit staring at charts 24/7. That is why we added an entire alert system to the toolkit. With these alerts, you'll never miss the setups that actually matter. Setting up alerts takes a few seconds. First, jump into the toolkit settings and scroll to the bottom. Enable all the alerts you want to receive and click OK. Then, click the alerts button on TradingView and select the price action toolkit as the condition and choose any alert from the drop-down. Customize the alert name to know exactly what triggered it, then select your preferred notification method: email, SMS, pop-up, or even push notifications to your phone. After you click OK, you're all set. Alerts will trigger automatically, so you never miss key setups. But what if you're tracking multiple tickers across different time frames? Sure, you could set up alerts on each one manually, but that takes time and clutters your workflow fast. That's why we built the PAT screener. The screener scans up to 15 tickers and time frames at once for features from the price action toolkit. And it doesn't stop there. You get strength readings for your zones. That's visual feedback telling you if an order block is low, medium, or high strength based on how price reacted and how much volume backed it. You get retest alerts, so you know if price came back to a zone or skipped it entirely. And you can also activate volume data into the row itself. Bullish or bearish volume displayed right in the screen, so you're not just reading labels, you're reading the pressure behind them. Now here's the cool part. Everything in the screener is tunable. You don't like how it detects fair value gaps? Change the detection method. You want breaker blocks to only show on wick invalidation? Toggle the setting. Even the layout itself is customizable. You can change the color theme, visual styles, and highlight only the parts you care about. It's not just about seeing everything. It's about seeing what matters before you open a single chart. So even if you're watching 10 tickers at once, you're only giving attention to the ones that actually have promising setups. That's the screener. And once you use it, you'll never create trading watch lists the same way. If you want to explore the price action toolkit and PAT screener yourself, click the link in the description and unlock instant access today. That's all for today's video. If you have any questions, make sure to drop a comment down below. And if you enjoyed the video, please leave a like and subscribe. Thanks for watching, and we'll see you in the next one.